Hello and welcome to Ticker Tapes. Today, we're back in the world of ETFs. Has the energy bubble burst? Well, if you looked at the performance table of the top 100 ETFs over the last week, then you might be forgiven for thinking that it had. Many of last week's top fallers are energy-related ETFs, and those that aren't are from related sectors such as commodities, foodstuffs, and grains, etc. Energy prices and performance matter because the cost of energy is a major factor in the market's pricing of inflation expectations, which have been trending lower, as we can see in this chart of both forward and current inflation predictions. The reality, however, is that crude oil prices remain up by 32.3% over the year to date. Over the last quarter, they are down by just 2.41%, and despite recent substantial falls in the price of natural gas, it's still up by 48% over the last 6 months. Gold, of course, is meant to be a store of value during inflationary periods, though in 2022, the price of gold, or in this case, the price of GLD, the Gold Spider ETF, hasn't reflected that relationship. GLD is down 4.54% over the last month and by more than 8% over the last quarter. The fund saw just over $1.1 billion of redemptions last week, modest enough in comparison to the $60.8 billion of assets under management, but it looks quite sizable when compared to the $4.25 billion of net inflows the fund has seen over 2022 to date. One of the criticisms often leveled at gold as an asset is that it does not produce an income. So it's interesting to note that $1.15 billion flowed into VYM, the Vanguard High Dividend Yield ETF, just as that cash was leaving GLD. Maybe that's just a coincidence, though investors were putting money into another inflation hedge in the shape of TIP, the iShares TIP Bond ETF. TIP, of course, stands for Treasury Inflation Protected, and $514 million flowed into this BlackRock-managed fund last week. Money moved out of mid-cap ETFs over the last week, with $846 million coming out of IWS, the iShares Russell Mid-Cap Value ETF, with another $729 million coming out of IWR, the iShares Russell Mid-Cap ETF, added to which $380 million exited IWM, the iShares Russell 2000 ETF. At the same time, $921 million was invested into IJR, the iShares Core S&P Small Cap ETF. The S&P 600 Small Cap Index is down by 18.67% year to date, which compares to a 19.32 fall in the S&P 400 Mid Cap Index. The latter has posted 22 new lows in 2022, while the Small Cap Index has clocked up 26 new price lows. Grayscale hopes of converting its $12.9 billion Bitcoin investment trust into the first spot price Bitcoin ETF have been dashed by the SEC, who rejected the fund manager's application. Grayscale is now considering legal action against the regulator. A spokesman for the fund management company said, "It is the SEC's arbitrary and capricious actions and discriminatory treatment of issuers that necessitates elevating this matter to the courts in the best interest of GBTC and our investors. Watch this space."